Welcome back to the Contrarian Trader. This is Robert Desmond. It is Sunday, December the 13th, 2009. Folks, the news this weekend that the federal government was in session. The congressmen, the senators were in session this weekend, and they were working diligently on our behalf, of course. Um, what they did is that they took a slow news weekend, and they voted yesterday to override or overrule an attempt by the Republicans to uh, filibuster an increase in our debt ceiling. And so the Democrats succeeded yesterday in overcoming that filibuster, and today they voted to increase our debt ceiling to roughly $13 trillion, an unbelievable number. But yes, this is what they've done. So let's be grateful for them working on a weekend on our behalf, representing us, the lowly voter. So let's take a look at what we're dealt with here. Senate to vote on $1.1 trillion spending bill. This is past tense now. It passed 1,000 pages of all good stuff. Supposedly, there is no inflation in this economy. This is what the federal government says. But 10% of this money is to go for existing services that are seeing increases in their expenditures. 10% of that money is going towards just increases. But the federal government is telling us in their own reports that there's no inflation. Yet they need to give a cost of living increase to their agencies. And so, what are they talking about here? Inevitably, folks, it's going to come down to us, the American people. We are going to have to vote these thugs out of office. And I don't care whether they're Republican or Democrat, they're all thugs. The Republicans, when they had control, they pulled this garbage as well. They have blood in their hands, so they are not absolved in any way, the way I see it. The person I want to have voted into office from either party is the person that says, I am for term limits for congressmen and senators. That's the man or woman that's going to get my vote. These people, they call themselves public servants. They make close to $200,000 per year. They go on TV and they're given accolades for their public servants by the talking heads who feel lucky enough to have them grace their airwaves. They retire with benefits that you and I can only imagine. After working 20 years, they get it after a few years in service. See, I'm even doing it service. A few years on the job, they get those benefits. They get health care that you and I can only dream of. They get the Cadillac plans they plan on taxing all of us on for having, if you're so lucky to have it. So I want to end this rant that I'm on now. Please, let's vote these people out of office. It's in our power. Please, we can't take on this debt anymore. Let's get right to the markets now. Let's take a look at it. I'm going to start this weekend off with a look at the S&P 500 on a daily basis, and simply to illustrate what they're doing now. A couple of weeks ago, I put it in my, I believe it was either last week or the week before, that there's really not much to say from here going into New Year's. What you're looking at is the market has a beam under this 1080 level. It's a reinforced iron beam. Now, what the federal government has done is the president's working group on economic activity, the plunger group, they've told Goldman Sachs and JP Morgan, listen, keep this market on hold. Make sure it does not break below this 1080 level, because they know that this market has been rallied up on very light volume, and if it has to come back down and test that 1050 level, that there's not going to be much support there to hold it in place. So they don't want to see that 1050 level. The 1080 to the 1119 level, that's where they want to see this market. And you could see, look at the volume here. It's steadily dropping off on a daily basis, steadily dropping off, and they're spiking the markets each day, 5 points here, 10 points there. We really knew back here that we weren't going to have a true breakdown of the market until we saw down volume really start to spike up. It wasn't happening. We weren't seeing it. So we knew that pullback was not the pullback that we were looking for. It wasn't like the pullback we saw back here in early October or mid-October. That was the beginning of serious pullback. Now, I had expected that perhaps we would come back up, retest this 1100 level, and then roll over. We probably will roll over, probably not until after the first of the year. That'll be our double top. But we'll see what happens. See whatever surprises they have in store for us. Let's look on a weekly basis. You can see this is a better illustration. You have the volume that's dropping off. The up volume is dropping off considerably. But to be fair, although I've been bearish, the down volume hasn't been there. So that's why I haven't been pounding the table saying, get short. I said last week and the week before, take your time, choose your position. They're not going to let this market drop. Add to your short positions as the market rallies higher. They're not going to let it drop until after the first of the year. Why? It's because there's too much bonus money at stake here. These Wall Street bankers, they get paid, these traders get paid on bonuses. So compensation dictates behavior. If compensation dictates behavior, it stands to reason that they're going to want to see the market close near the highs of the year if they can, and they'll do it on light volume, no big deal to them. And they'll let it drop after the first of the year. They book their profits, they look great on paper to their shareholders, and when they send out their statements. The federal government, they want everybody feeling good going into the holidays. They want their portfolios of 401ks at the highs of the year. That way they spend more money. Although that money is going on credit cards, which are just going to go overseas to China anyway, because they're the ones producing the goods. They think in their heart of hearts and their not too bright brains, they believe that this is going to help the economy. No, it's only going to put the American consumer into more debt, and then after the first of the year, they're going to be taking out loans in the 401ks. That money's going to come out of the market. They'll use that money to pay down debt. Mark my words, that's the next big thing that's going to happen. People taking loans in their 401ks because they're getting smart. They're seeing all this interest they're paying out on their credit cards. Why not take the money out of the 401k on a loan, pay off the debt, and you're going to see probably the bankers try to put restrictions on 401k loans. Mark my words, first 6 months of 2010, that's what's going to happen. Because they're thugs. They don't want to see that money leaving the market, and they want to see that money coming in on credit card payments. That's what they want, that interest. That's where they're making a lot of their money. Wells Fargo. I've told my subscribers day in, day out, watch Wells Fargo. We had a head and shoulder formation here. Perfect. And I've said 2250 is where they issued that secondary offering a few months ago, and we're going to revisit it. And when we do revisit it, and if we break below it, you're going to see all those banks that issued secondary offerings, they're going to begin to sell off because they're going to see the investments that were made in Wells Fargo during that secondary, they're going to start to evaporate. People are going to start to sell that junk. And these banks still have yet to divest all of those losses. They still have it on their books. It's just accounting. Washington's allowed them to change the accounting rules. That's what made them show profits, plus their trading operations. They still have lots of junk on their books, and mark my words, it's going to come home to roost. So Wells Fargo hits 2250 and breaks below it. You're going to watch all the money, all those banks that took out secondary offerings, Bank of America, etc. They're going to get hit as well. U.S. dollar markets. We're long the U.S. dollar. We went long the U.S. dollar back here. Okay, we now have a profit in the U.S. dollar. When nobody else wanted the U.S. dollar, we were buying it up. Now the market, in spite of the rallying dollar, is still rallying higher. That's a divergence. They're just keeping this market in check. They're ignoring the fact the U.S. dollar, it may weaken because of this news of the debt ceiling hike this weekend. Going into this week, it may be a little bit weak. That may be the reason why the market's been able to shake off the rally in the dollar. It's not going to last long. Eventually, you're going to see this dollar continue rallying higher. The market's going to correct, and you can see complacency in the VIX. Look at this bearish hammer on the VIX. People are way too complacent out there. So be careful. Don't get complacent. I don't think that we're going to break this support level on the VIX. I think that it's going to hold here, consolidate, and then if it rallies and breaks above that 25.93 level, you're going to see this market really seriously correct after the first of the year. TZA. TZA is a short fund on the Russell 2000. Now, the Russell 2000, you all know, we've been going short of using TZA for quite some time. Now, you'll see that we double bottom here, 1096, came back down, retested 1082. You're seeing the same thing on the IWM. You're seeing that we're going to try to rally back higher up to the 62, 61 level. That's when you want to start adding to your short positions. That's the intelligent trade. So please stick with us. Watch out for this trade here on IWM. We're going to be adding to the TZA position as we continue higher here. Our trade of the week going into the week is we're going to be looking at Cocoa, Corinthian Colleges. Nice key reversal here on Friday. Our subscribers, I'm going to expand upon this a bit further in my weekend commentary to you. So look forward to that. Folks, those who aren't Contrarian Trader members, please take advantage of our 14-day free trial offer. Give the Contrarian Trader as a gift to your friends at a 33% discount. You can link to that on our homepage. Everybody else, have a great trading week. Look forward to hearing from your emails, and have a great weekend, folks. Thanks. Take care.